Hello, everybody. Welcome to Wealth Window. Today, we are going to continue a series called Investing 101. This video will specifically focus on long-term investing strategy. In today's fast-paced financial world, many investors are drawn to quick gains and instant gratification. However, in this video, we will explore the powerful concept of long-term investing mindset and strategy. You'll learn how adopting a long-term perspective can not only enhance your investment portfolio, but also lead to greater financial security over time. We'll start by discussing the fundamental principles of long-term investing, including the importance of patience, discipline, and a well-researched approach. You'll discover how these principles can help you navigate market volatility and avoid the pitfalls of emotional decision-making. Next, we'll delve into why a long-term mindset is crucial for successful investing. By focusing on the bigger picture, rather than short-term fluctuations, you can make more informed decisions that align with your financial goals. This mindset encourages you to hold on to your investments through market ups and downs, ultimately leading to more substantial returns. Finally, we'll highlight the potential benefits of successful long-term investments. Imagine watching your wealth grow steadily over the years, providing you with financial freedom and the ability to achieve your dreams. Whether it's funding your child's education, buying a home, or enjoying a comfortable retirement, long-term investing can be a game changer. So if you're ready to shift your perspective and embrace a long-term investing strategy, stay tuned as we guide you through the essential steps to build a prosperous financial future. Long-term investing is a strategy that involves holding on to investments for an extended period, typically 5 years or more, with the goal of achieving significant growth while avoiding the lure of trying to time the market. This approach contrasts sharply with short-term investing, where individuals buy and sell assets quickly, often in response to market fluctuations. While short-term investing can yield quick profits, it also carries higher risks and requires constant monitoring of market trends. In contrast, long-term investing allows you to ride out market volatility and focus on the overall growth potential of your investments. Historically, long-term investments have demonstrated impressive performance. For instance, the stock market has historically returned an average of about 7 to 10% annually when adjusted for inflation. This consistent growth over time highlights the resilience of long-term investments, even during economic downturns. By staying invested, you can benefit from the market's recovery and growth phases, which often outweigh the temporary dips. One of the most compelling aspects of long-term investing is the power of compounding returns. When you reinvest your earnings, whether they come from dividends or interest, you essentially earn returns on your initial investment, as well as on the returns that accumulate over time. This compounding effect can significantly amplify your wealth, especially when given enough time to work its magic. In summary, understanding long-term investing is crucial for anyone looking to build wealth. By differentiating it from short-term strategies, recognizing its historical performance, and appreciating the power of compounding, you can set yourself on a path toward financial success. Key principles of long-term investing. Successful long-term investing is built on a foundation of essential principles that guide investors toward achieving their financial goals. One of the most critical principles is diversification. By spreading your investments across various asset classes, such as stocks, bonds, and real estate, you can reduce the overall risk of your portfolio. Diversification helps to mitigate the impact of poor performance in any single investment, allowing your portfolio to remain more stable over time. This strategy not only protects your capital, but also positions you to benefit from different market conditions. Another vital aspect of long-term investing is understanding your risk tolerance and investment goals. Each investor has a unique comfort level with risk, which should inform their investment choices. Knowing how much risk you can handle will help you select the right mix of assets that align with your financial objectives. Whether you're saving for retirement, a home, or your child's education, having clear goals will guide your investment strategy and help you stay focused on the long term. Lastly, patience and discipline are paramount in the world of long-term investing. Markets can be unpredictable, and it's easy to feel anxious during downturns. However, successful investors understand that staying the course is often the best strategy. By resisting the urge to react impulsively to market fluctuations, you allow your investments the time they need to grow. This disciplined approach, combined with patience, can lead to substantial rewards over the years. Developing a long-term investment strategy. Creating a personalized long-term investment strategy is essential for achieving your financial goals and building wealth over time. The first step in this process is to set clear financial goals and timelines. Consider what you want to achieve, whether it's saving for retirement, purchasing a home, or funding your children's education. By defining specific, measurable goals and establishing a timeline for when you want to reach them, you can create a focused investment plan that aligns with your aspirations. Once you have your goals in place, it's crucial to conduct regular portfolio reviews and adjustments. The financial landscape is constantly changing, and so are your personal circumstances. By reviewing your portfolio at least once or twice a year, you can assess whether your investments are still aligned with your goals and risk tolerance. This practice allows you to make necessary adjustments, such as rebalancing your asset allocation or shifting funds into different investment vehicles to optimize your returns. When it comes to selecting suitable investment vehicles, consider options like index funds or exchange-traded funds, ETFs. These investment types offer diversification and typically have lower fees compared to actively managed funds. Index funds track a specific market index, while ETFs trade like stocks on an exchange, providing flexibility and liquidity. Both options can be excellent choices for long-term investors looking to build a solid foundation for their portfolios. The mindset of a long-term investor. Maintaining a long-term investment mindset is as much about psychology as it is about strategy. One of the key aspects of this mindset is emotional resilience, especially during market fluctuations. The stock market can be unpredictable, with prices rising and falling based on various factors. A long-term investor must develop the ability to stay calm and composed during these turbulent times. Emotional resilience allows you to avoid making impulsive decisions driven by fear or greed, enabling you to stick to your investment plan even when the market is volatile. Another important element is focusing on long-term goals rather than getting caught up in short-term market noise. Daily market movements can be distracting and may lead to anxiety about your investments. Instead of reacting to every headline or market dip, remind yourself of your overarching financial objectives. By keeping your eyes on the prize, you can maintain a clearer perspective and make more rational decisions that align with your long-term strategy. In summary, cultivating the mindset of a long-term investor involves emotional resilience, a focus on long-term goals, and a commitment to continuous learning. By embracing these psychological aspects, you can enhance your investment journey and work toward achieving lasting financial success. Common mistakes to avoid. Long-term investing can be a rewarding journey, but it's essential to be aware of common pitfalls that can derail your progress. One of the most significant mistakes is panic selling during market downturns. When the market experiences a decline, it's natural to feel anxious about your investments. However, reacting impulsively by selling off your assets can lock in losses and prevent you from benefiting from future recoveries. Remember, long-term investing is about weathering the storm and allowing your investments the time they need to rebound. An effective way to avoid the emotions associated with daily market fluctuations is to simply not check the market daily. If you are someone who is prone to making emotional decisions, it might be best to check your account once every few months as opposed to daily. Another common trap is chasing trends or hot stocks. It can be tempting to jump on the latest investment fad or follow the crowd into a stock that's currently gaining attention. However, this approach often leads to buying high and selling low, which can be detrimental to your portfolio. Instead of chasing after what's popular, focus on conducting thorough research and investing in fundamentally sound companies that align with your long-term goals. Lastly, it's crucial to emphasize the importance of sticking to a well-thought-out plan. Many investors fall into the habit of frequently changing their strategies based on short-term market movements or emotional reactions. This lack of consistency can hinder your progress and lead to missed opportunities. A solid investment plan should be based on your financial goals, risk tolerance, and time horizon. By adhering to this plan, you can maintain focus and discipline, which are vital for long-term success. In this video, we've explored the essential elements of a long-term investing strategy and the mindset required to succeed in the financial markets. We discussed the significance of setting clear financial goals, maintaining emotional resilience during market fluctuations, and the importance of diversification and patience. By adopting a long-term perspective, you can navigate the ups and downs of the market while working towards substantial wealth accumulation. As you embark on your investment journey, remember to take actionable steps toward your goals. Start by developing a personalized investment strategy that aligns with your financial objectives and risk tolerance. We encourage you to engage with this content and share your thoughts in the comments below. What strategies have you found effective in your long-term investing journey? Your insights could help others in the community. That will wrap up this video. If you found this video helpful, we encourage you to subscribe to our channel for more insightful content on investing and personal finance. Be sure to follow along as we continue the rest of our Investing 101 series, and I'll see you in the next one. Thank you for watching, and happy investing.